Hello everyone, Yuri Schrademan here with Innovative Mortgage Brokers. So one of the questions I get asked quite often is, what are your rates? So I wanted to today briefly discuss the loan estimate, which is a very important document in the mortgage business. Basically, it discusses all the fees that are associated with the loan. And there are a lot of different numbers there because there's a lot of parties involved in the transaction. So the loan estimate breaks down the closing costs of all the parties that are involved. However, just like it's called a loan estimate, it is an estimate because a lot of those third parties are being chosen down the road. Therefore, in the beginning of the process, there's no way to know how much those fees are going to be. And because of that, we estimate the fees in the very beginning and then get the actual fees at closing. But when you do get the initial loan estimate, because it is confusing, it has a lot of fees, I just wanted to briefly discuss and help everyone understand how to read the loan estimate because some fees you should be looking at, some fees are kind of more or less irrelevant. So first of all, it's here's a copy of the loan estimate. So this is ABC Lending is just a sample loan estimate, the company information right here for the lender. The date issued, this particular loan estimate that I'm using as a sample was issued on April the 7th, 2025, and the applicant is John Smith. His current address is 123 Main Street, Conshohocken, and then the property he's looking to buy is 123 By Street in North Wales. The sales price is 615,000. This loan estimate is for a 30-year term. It's a purchase transaction, fixed rate, conventional loan, and the rate is not locked. So, a couple things I want to point out. First of all, when you're comparing loan estimates, when you're comparing rates, you need to compare the rates, the loan estimates at the same time frame because what happens is that rates change every single day. Sometimes, depending on the volatility of the market, they could change a couple times a day. Therefore, if you're comparing somebody's rate today to somebody's rate yesterday, you're not really comparing apples to apples. You're kind of comparing apples to oranges. So you do have to make sure that you compare it at the same time frame. And secondly, when you're looking at rates, don't only look at the rates, look at the fees. Because in reality, the interest rate, I can get you whatever interest rate you want. The question is that cost that you're going to pay for that lower interest rate justify the savings? Okay. So let's get started really quick. So this loan estimate is for a sales price of 615,000 and the borrower is taking out $492,000 loan. He's getting a 6.49 interest rate and the monthly payments based on 492,000, 6.49 interest rate, and then a 30-year term. The payment's going to be 3106.54. Now, it says that it talks about in terms of the prepayment penalty. So this particular loan doesn't have any kind of prepayment penalty, and this loan doesn't have a balloon, which nowadays most loans don't. But here's the breakdown of the payment. So the payment is, like we mentioned, 3106.54 based on the 649 interest rate. This loan doesn't have mortgage insurance because the borrower is putting down 20%, and the estimated escrows are 750, which means that the total estimated monthly payment is 7857, which includes 3106.54 for the principal and interest, and also the 750 for the escrow. Now, let's forget about these closing costs for now, but here's the breakdown of all the fees, right? So this particular borrower needs to bring in 145,000, which includes the down payment, and it also includes the closing costs. When you're shopping for rates, okay, when you're shopping for lenders, the biggest section, the main section that you need to look at are the origination charges. Now, it really doesn't matter what the breakdown is. It doesn't matter what they're called, whether they're called origination fee, whether it's called broker fee, points, underwriting fees, so many different names. But your concern is you're looking at the total dollar amount in the origination charges. In this particular case, we only have a lender fee, which is an underwriting fee of 1145, and there's no other lender fees in this particular example. So again, when you're comparing, make sure you're comparing the two biggest things you want to compare is the interest rate, 6.49 in this case, and you also want to compare the lender fees in section A, which are on page 2 of the loan estimate, and in this case, the fee is 1145. The rest of these fees, there's a lot of other fees. So you got Section B, which is services you can shop for. So these fees include the appraisal fee, credit report, flood cert, tax cert fee. These fees, honestly, I wouldn't really be too concerned about because they're relevant. They're going to be pretty much similar across the board. In terms of the Section C services you can shop for, these are the title company fees. So I wouldn't really recommend looking at this section either because you are the one that picks the title company that you want to work with. Therefore, these fees in Section C will be the fees for the title company that you choose to work with. Section D is just a total of Section A, B, and C. Section E is the government fees. So those are transfer taxes and recording fees. Honestly, all those fees are relevant as well, just because of the fact that they will be the same across the board. The government fees don't change from lender to lender. They stay the same across the board. They change based on the location. For the prepaids, same thing. These are paying your taxes, paying your insurance in advance, paying the interest for the days due. And again, those fees are pretty much going to be third party. Nothing that you should be concerned about looking at lenders. And then finally is the Section G, which is setting up the escrow account. And again, escrow accounts really don't matter from the lender. So with all that said, Section B, C, E, F, and G are all sections that don't really change from lender to lender. The biggest section that you need to look at is the total origination fee in Section A, which appears on page 2 of the loan estimate. If you have any questions, please reach out anytime. Would love to have a conversation, see how I can help, explain anything that I can.